Welcome to Trading Lounge and the US indices for the 15th of April. And yeah, it looks like we've started our correction, as you know, and that will be going through most markets, so all of indices and all of stock as well. So we're looking for an ABC correction. So as a starting point, we always look for the 38.2% retracement level. So that can bring us down to this point here. It is rather a large drop, but we should just note it first up. So we can look at, where are we here with this? It's probably that and that. I'll just take it from here. I'll take it from this low. So that would be our starting range, but it does seem a little bit far actually from what's going on, but let's just clean this up a little bit. I'll just leave that there for the moment, okay? So it appears so far that the little move down through here can be counted as 5 waves. Now, would that be just 5 waves in this first leg? So that's what we need to sort of figure out a little bit. So just to the hourly chart here where we keep our trades. So look, we've done all the right things at the right time. So we've taken a percentage profit here, and I think we may have taken a percentage profit here. I can't remember if I moved that or not. But anyway, whatever, we're stopped out at this point, which is fine. So like I said, this first move down through here and this move through here, so to speak, it appears that it's 5 waves here in most cases. We'll need to check as we go through stock, but do we can investigate this in a moment, but you know, do we have a rally here and then a third wave down and then a fourth and then a fifth wave for this one here, you know, and then this leg here would be the A, the B and the C wave coming back up, and then and then another 5 waves moving down lower into this space, so to speak. So the thing is I've just done a simple zigzag correction, which is a 5-3-5 structure. So that's normally what you get in a wave 2, but we're working with a wave 4. So wave 4s, there's about 11 or 12 different corrections. There's always a debate about that, but whatever the case may be, is that when we're talking about a wave 2, we're just talking about a simple zigzag, a 3-5-3-5 structure. But when we're talking about a wave 4 here, we're opened up to those 11 or 12 different types of corrections. So basically anything can happen here. So what we're mapping out here is probably not correct, but it's a starting point. That's all it is. So wave 4s can have the flat family of corrections. So there's 3 different types of flat corrections in there, and with a flat correction they have just 3 waves down in the first leg and 3 in the second and then 5 in the next leg. But they can do all sorts of things. They can have 3 legs down here and then make a new high here and then have 5 waves as an expanded flat or a running flat, and the regular flat and so on, and triangles and double zigzags and things. So what I'm proposing here is probably not right, so long as you know that. And the second thing is that if I've got this correct up here as the third wave here, so that's the other point too. It appears so, but there's a lot of little squiggles in there. And the third thing is that, well, if that's the length of the third wave, then the 38.2% retracement level is here, so down at the 4,050 roughly in that area. So always what I tend to do, I mean, everybody's got their thing about it, is that I never make any decisions until the first wave is complete, either in 3 waves or 5 waves, because if we get 5 waves or if we get 3 waves here, that takes out like most of the corrections you know. So if we just get 3 waves, we're left with a flat family and the triangle and so on. So we can eliminate half of the corrections if we wait for the first leg to finish. So, and also with wave 4s is that we never really make any trading decisions until the whole thing is much more mature. So what we can normally do though is we can say, well, we're in a bull market, so the logical thing would to be buy new highs here. So we can do that. We'll put that in there and we can adjust it later. Okay. So all we're going to do really for the next few days is really just observe. I'm not interested in shorting. I don't want to short against the trend because I don't know what type of correction we've got. We could get, you know, we could just get caught out, and I'm not there to manage it every sort of minute as such. So we're going to just relax, breathe deeply, and we're going to look for buying opportunities once we've got a grip on what's going on. So yeah, it's okay for me to say something like this or draw something like this, but it simply, I don't know if that's correct or not. So yeah, and this wave 3, I think it needs to be over here. This was an alternative count that I had before. So anyway, not to worry about that too much. Let's just go to the tick chart here for that. Let's just investigate this here. Maybe I'll just get some of these. I don't even know if this is the right degree of structure, but it doesn't matter. 1, 2, 3, 4, 5. ABC here for this. 1, 2, 3, 4, 5, 3, 5. So we've got that extra wave there, haven't we? Well, 1 and 2. Or could, let's just want to have a look at the NASDAQ for a second. Sorry about this. Let's just get an idea of what this is here. That is the top there. Okay, so this here, we can look at 1 and 2 here, and then all of that is, it's not going to pan out either, is it? I know we're at the end here because you can see how it's like a ball bouncing on the ground. You know, the things get shorter and shorter. So we're going to be retracing here. That's one thing. I'll just come back and check that a bit later. So we'll be back up into this space here, which is really this block of supply in here for that. So we'll see some sort of corrective rally come into play here for this before seeing further downside. It's let's go, that's not very helpful, so we'll go back here. And definitely the center of the trend in right there, so that gives us an equal weighting on both ends. So I'm just going to leave it like that for a second. I will need to mull that back over. It's a little bit early in the morning for me here. So I just sort of wake up in the morning and start work basically. So I don't get a chance to read news and see what happens and all that sort of stuff so much. Well, that can just pretty much go there then. And we can look for, there's definitely 5 waves in that little structure there, nice strong third wave, and here for that. So I'm going to label it like this as wave 1 and 2 here just to start with. Now that could be wrong and we could end up with a B wave here, or rather it would be rather short, but I'll just put it there anyway. That would be this B wave and that being the A wave here. If that's the case, we would have wave C down here for that. I mean, it's possible. I mean, if we just go back to the 1 hour chart here for a moment, just get a grip on this. I mean, what I was doing just then is just counting for the first 5 waves down here as 1 and 2, and then 3, 4, 5. But this is where we've got to be careful a little bit and have a look at things here. It's also possible to have this here as the A wave here, the B wave here. It's a bit small, and the C wave here for this wave 4 here. For this, we'll look at stock. When we look at the stock, we'll be able to look at things, because all the corrections here have been really quite small. None of them have really reached back, you know, to their levels. So we just need to be a little bit careful about that. So look, as I mentioned at the beginning of the video, we don't have to figure it all out. We've done our job. We've traded up here. We've caught the third wave. We've made money. And now we know that there's a turn in the market, possibly down to this point. I just don't know how it's going to unfold. I just get into the guessing game, and I don't want to do that just yet. But that's the sort of skeleton of what we're looking at in either way here for this. And if we're totally wrong, well, then we'll just buy new highs. So even once this B wave is in here, or wave 2, then what we start to do at that point is we start to bring that down into that entry point there for that, you know, and then we move back in from that point. And then if looks like we're getting 5 waves down, well, then we'll bring it down to this top over here for that. And if we have 5 waves at that point, well, then we'll know we're going to get 5 waves over here for that. So it's just a sort of, I don't know, it's just a little puzzle that we just have to take the next logical step in. That's all we can do with this. And the same thing with the NASDAQ here. So we can expect a rally off the 13.8, off 800 for sure, and coming back up into probably this space here for this. Anyway, I'll pull this apart for the sake of it a little bit later. Let's have a look at, just get a general idea of how stocks are going with this. So if Amazon, if this count is correct for Amazon, with a wave 3 here, an A and a B and a C here for wave 4, and then we can look at this as wave 1 and 2 here, and then we'll look at this as wave 3 up here, and we're looking for 5 waves in this section here. So this would also be a wave 4 pullback in here. And the other point with this too is that with the trading levels, we've got the major level here. So as it goes, you've got major levels, then medium levels, and then minor levels, and then sub levels, and then micro levels. So those levels expand on this price ratio here, the Fibonacci price ratio here, and it's kind of good because we know that the Fibonacci works with proportions of the structures. So bringing in the price ratio, the Fibonacci price ratio on the price here is very helpful in lots of ways. But the main point here is that we're trying to find support on top of group 1 here. That's what we're looking for. So we've never really had a good sort of reaction here. We've just had like the overshoot pattern here for this. So let's just go in and have a look at this. But in a nutshell, we're looking for support on that level in one way or another. Rightio, sorry, getting my head around it. So if this count is right, we're going from this green wave 2 low here, and we're going on to this top here. That brings us down. That's actually quite good, because that actually brings us down to this, the previous wave 4 and the 38.2% retracement level there. Okay, so see, in this case, it's possible that we decided yesterday to keep the stop out of the way down here on this particular stock. So there's a couple of them we're taking profit on, and a couple of them that we were going to let go because of the nice tight trends and things. So this will be, look something like this. See, in this case here, we may just get the B wave here, the C wave here, and then we're up again here. So in this case, what we'll do is we will just, from that top, once the B wave comes in, we'll put a line through that, and that will get us in over here for that. We need to have a look at that. We're on 100 ticks at the moment, and I can't see into that, so I'll just go into 20 ticks, and we'll just look at this here. Well, 1, 2, 3, 4, 5 for wave 1 here, wave 2 here, and this is all of the third wave in here. Might even be a bit more actually, but anyway, we're right at the end here for this, so we'll get a bounce here as well. There could be one more little low here, as 1, 2, 3, 4, 5 here. You know, not a big deal. So we'll just come back, but that's impulsive. That's 5 waves. Okay, so that means that we will see some sort of rally. Like I said, it can come a little bit lower, but we'll see a rally back up. And it doesn't really interest me, the rally, at all. It's just, I'll just take it from the low there, but we can adjust that later. It doesn't have to, but it can come back up to this point. But it's just the, you know, it's just putting the flags in the water, and we'll just swim between that for the time being. But yeah. But see, it's interesting in this case, because with this stock here, you know, when we were looking, if I can just bring the S&P back here for a moment, just bring that into here and bring this across here. See, with Amazon here, we've got this A wave, B wave, and C wave here for this, and that's quite a good case, because it'll take us to the 38.2% retracement level. So over here with the S&P, this A wave here, B wave here, and C wave here, that's also now presenting a good case too, isn't it? You know, that's one stock that can go. That's one stock that we could put in that basket into this count here for that. So we don't have any answers. We're just gathering information at this point, really. So that's Amazon. Alphabet, we also decided to keep the stop out of the way. We did take some money off the top of the table here. We were looking for a bit of a correction here, so we can, but still looking for further upside, so that's okay. Just one of those stocks we're going to be holding. And the reason for that, like Amazon, the trend is really tight, so there wasn't really such a big deal, you know. If we work from the low here, as wave 1 here, we've got 1 and 2, and here 3, 4, and 5, so that's all cool. And we can take this low here for that, put that on there. That's the 38.2% retracement level, and the wave 4 of 1 lesser degree, so that's kind of where we're looking at that. I think this level here was just leaving the stop out of the way, I think, but so yeah, we don't have to do anything here. I mean, we can buy new highs, but they're not going to come just yet, I don't think. So we can do that. And the levels here, we've got this major level here, then we've got the minor levels 1, 2, and 3 that make up group 1. So 1, 2, 3, and then 5. But 5 we have as the medium level. 5 is the second strongest number in the market after 1. So we want support on this level here, which is going to take a little bit of time, really. So let's just say that it comes down here. Then we would be looking for some sort of move here for this, like this, and then up from that point. I put these here, but when I close the program, anything on this side of the price disappears. Unfortunately, it'll get squashed back up here. So if I've changed it and it looks different from the next day, that's the reason why. If I'm on the daily chart, it's just the tick chart that does that. Anyway, that's Apple. So Alphabet, we don't really need to do anything there. It's really stable. It's in its own world. So Apple, so this is the one that we've got. We've got two counts on this, as you may know. We've got this as wave 3, 4, and 5 over here for this. And then we're coming down for an A wave, a B wave, and a C wave here for this. Or we could look at all of this as a running flat, really. So part of the flat family. So an A wave here, an A, B, C here for the B wave, and 5 waves down for the C wave here. And this pattern's quite interesting, really, because this is the same as Amazon. If I can just bring that across for a moment. I mean, it's... So, yeah, get a good picture of that. And then you look at Amazon over here. The only difference is that Apple made that new high up here, didn't it? You know, and it didn't make a new low down here. So it's kept this whole leg here was just all skewed to the upside here. So there is a good case for considering this as wave A here, B here, and C here, and having wave 4 sitting here and continuing to move up from that point. So the thing against that, though, was that this little move in here, the A wave here, didn't really present as a nice 5-wave structure. I could do it. We could go wave 1 here, an A and a B and a C wave here, some sort of expanded flat in wave 1 and 2, which is not in the Elliott Wave book, but a few other things aren't as well, and I see them quite a lot. So anyway, what we're going to do about that was really just, we know that this is the 50-60% retracement level area here. So if it was going to fail, this is really where it's going to fail from. Okay. However, if this level here or this zone here becomes the tested support, well, then we're going to see a move above the 150. So in a way, we've got plenty of time if we've got a little bit of patience. If we try to make decisions in this space here about what this count is and where it's going to go, and we fixate on that, well, then we're going to get ourselves into trouble. Of course, we could get it right, but we want to be right. So we just need to be a little bit more patient to nail that down. So that's really what we're going to do here for this. But at the same time, we'll go in and check it out. Looks like the A wave, the B wave here, and one more move to go up to here. But if it goes to here and here, that would be 5 waves down at that point, and then we go up from that point, because we could go 1 and 2 here. I need to pull that apart as 3, 4, and 5 in here already, and an A and a B and a C. So we'll just see. If it doesn't really matter, like I said, with these corrections coming down, we just need them to play out first. But we can pull that apart if somebody wants something to do. This grey box here is the 50 and the 61.8%. So it's possible to have that wave 5 of C of B in there. So our job now really is to go, well, yep, that could be, we could be looking at wave 3 up here and then to wave 4 here, or this could all be down for wave 1 here. But I think that we just really need to take this on board with all the other markets at this point. That would be the logical thing to do, wouldn't it? To look at this as the A wave, the B wave, and the C wave coming down here for this. So then we can look to move in there. And in this case, we would look for this as a higher degree of structure, of course, in this one. I'll just pop it there. And wave B will come back up into this block here, is that top. This thing here and this here, that's where that's the balance line for this. So it will try and pop its head up over that. But we don't want to be too biased. We need to put that wave 1 in there and 2 there, because that's the truth of the matter, isn't it? So we've just got to work through that, just to highlight, just so we don't get carried away on a particular direction. I know some folks think that it's bullish and some think that it's bearish, but we just need to gather the evidence there. So like I said, we're not really looking for any answers today as such. Square here, once again, I've got it as 1, 2, 3, 4 and 5 here, which seems pretty logical, but I also know too that that this can play out in a larger way here as well. These small labelings were here because of when they updated the platform, everything just shrunk. So yeah, so look, this could be a wave 4 pulling back down here, or the whole thing could be a B wave. So all of this could be an ABC for the A wave here, a B wave here, and a C wave down here. I don't think so, but let's just see how it plays out here on this 100 ticks. So we've had trades in here for this, and we've taken pretty much the same as everything else. We've taken a percentage here, and then we've been we talked about putting a stop here, and we also talked about, if you wanted to really tighten it up, put a stop in there as well. So whatever you've done is good, as long as you've done something. So the first thing here we need to do, the good thing about this, I guess, is that from the low here, this first 5-wave structure is really quite clear. So that means that we really get our starting point from this wave 2 low to this wave 3 high here. And we're right at the 38.2% retracement as it stands already. But this gap down here concerns me. Have I got this wrong? Could I put, we could probably put this here if I think about it, put this wave 3 here and wave 4 here for that, and look at this last 5 waves here. Where would that leave that? That would leave that as 1 and 2 and 1 and 2 and 3 and 4 and 5. So I'd have to drop it back down to this one here, which is probably the right thing to do. Yeah, it looks like the right thing to do. So I might just do that. Sorry about that. Feels a bit better. But anyway, we're at that, I can't, I mean, I could probably look at this here in 1 and 2 and 3 and 4 and 5 to here. I'll just put that in there, just show that I've looked at it. Don't need that. Anyway, I'll just leave it. Like I say, I'll leave it. I wanted to. It's following other markets as well. That can't be right then. It's got to be the other way around. That's got to be 1 and 2 into here somewhere. And this has got to be 3 and 4, and then 1, 2, 3, 4, 5 here. I mean, that's where that is, but this is where the resistance is there. you know, if you've got a volume profile in there, that's where that volume would be. So that's what at 265. So we're thinking something like this. Okay, that's that out the way. And Tesla, we've had a nice turn in Tesla. So here, just in the bigger picture here, there was really just sort of Apple and Tesla that were the bearish cases, you know. And with Apple, there's a chance that it may not be the bearish case. There's also a chance here as well, because you can count this down here as an A and a B and a C wave here, a bit of a long shot. But also too, this doesn't count as 5 waves up here, as I've mentioned many times. So we just got to see how this plays out. So this is where the trading levels comes in. We know that if we get a support on top, there's a couple of things that can happen here. So if we were going to go long, if we get the 800 as the support, then we've got the opportunity to go long from that point. We can go from 800 to up to probably 1,000 or just above or whatever. The other point is that if it pulls back here like it's doing now, as you can see, if it pulls back and we can figure out that it's corrective, well, then we can move in again on it. But we also know too that we don't need to do anything right now, because we know that 8's a profit-taking number, and it got hit over here, and now it's being hit under here. It's getting less and less, but we know this is the danger zone here, isn't it? So we know that. So we just got to act on that. So let's just go in and see where we're up to with this. Well, we look at taking a percentage profit here, or taking a percentage, or taking profit. And yesterday we brought the stop up to this point here as well. So we've tightened it up a lot. In this case here, it's interesting, isn't it? We don't have 5 waves down. We have 3 waves down at this point. We've got a nice 5-wave structure in here for the first one. Then we've got the correction that came back up 50 or 60%, but just banging on the 65 here, the lower end of group 2, and it's coming down and sitting on. There should be another level in there, which we'll just put in there, the midpoint. So 50 there, and it's coming down, bouncing off number 3. Number 3 and number 8 carry about the same weight. Probably 8 carries a bit more weight actually, but then 3. So we could probably get that there. We could probably list the numbers as 1 being the strongest number, then 5, then 8, and then 3. So it kind of presents a bit of a buying opportunity here, but I can't confirm that's 3 waves. I mean, technically we would confirm 3 waves if the market came up here and took that out. It's tempting to buy there, I have to say. If you did buy here, then you need to stick the stop under number 2 here. If you bought right on the level here, then the stop would need to go under the 2 here. So under the 20 here, you wouldn't put it at 19 or 18 because 8 is there. You wouldn't put it at 19 because if you're dealing with 20, the 19 you'll get spiked out. All the support will be at the 18. That's where it will gather. So you can put the stop at 7 or 6. You get pretty good results at 7, but you'll get much better results at 6. So at 16. So that's how you would put the stop there. So between the numbers 10 and 20. So you got 10 points. Or let's just go from talk about stops for a moment. It's just a bit of education. So from the 700 to the 10 there, because each one of these is 10. If you're looking for a stop there, and you know things, you know that 1 is the strongest number, so 10. So you wouldn't put the stop at 10, and you wouldn't put it at the 700 here either. So between up to 10 here, we've got the numbers 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we know 5 is the second strongest number in here. So the first question you decide is, would you put the stop above 5 or would you put it below the 5? You break it down that way. If you wanted to go above the 5, you know that number 8 here is the third strongest number. So you'd want to be tucked under the number 8. You can put it at 7 and get away with 7 a lot, but you'll have much better results at 6. So you'll be at 6. So if you're going to put the stop above the 5, it has to be at 6. Now, if you're going to put it under the 5, you don't want to put it at 5, because that's just silly, because 5 is the second strongest number. It will be like a magnet and attract everybody's attention. So you don't want to put it at 5, and you don't want to put it at 4, because if you're working with 5, you're going to be spiked at 4. So you could put it at 3, but also 3 is the strongest, so you've got to go to 2. So most of my stops when I'm going long will always end in 2 or end in 6. It's a very subtle point. It might be $7.26 or $7.22. So it's just a very subtle thing if you're trading stock, but once you get the hang of it, it's just refining your understanding of numbers and psychology a little bit further. That's all. We can talk about the short side later, a different set of numbers. Anyway, I find that quite interesting. This could actually be done and dusted here for this. We'll label it accordingly. But I don't want to make a move on it because it's not in line with the rest of the market at this point. And also too, it might end up being a flat correction here as well. That's the other point. So we've got because we've got 3 down here instead of 5, we'll still get 3 back up here to the 61.8%. And then we'll get another 5 coming down here like this. That's the trap. If you're bored, you can trade it up. It's not a problem, but you'll just take the money at 750 or 48, because 8's the profit-taking number. That's where that will come in at there. Okay, sorry for taking so long. Okay, that's it. Yeah, sorry for waffling on. I've got to watch myself on that. But yeah, there we go. Thanks for tuning in. Much appreciated. Cheers.